So if you're here for some quick money, this video probably isn't for you. This channel, guys, we focus on long-term investing. We focus on success over the long term. And the stocks we're going to go through today are just that. They're great businesses that I think will return at least a double up on our investment over the long term. Now, long term, super long term, these stocks can probably do even better. But I'm saying, 3 to 5 years from now, I think all of these stocks will be at least a double up. Now, the way I look at my investments when I analyze stocks, new potential stocks, I see it a little bit different than most investors out there. I know a lot of people just go out there to see the stock price. They're like, okay, it's $50 per share today. Can it double to 100? Yeah, sure it can. Amazon's at 3,000, right? So why can't the stock double to 100? It's not really the right way to look at it, in my opinion. You got to look at market cap. You got to look at their total addressable market, their TAM. You got to look at each business differently. How much market share they have, how much can they grow. All these different metrics come into play, and that's when you can really calculate, okay, this is a $70 billion market cap company. Can it really double to a $140 billion market cap company? Most likely, okay, then that is a good opportunity for a double up. So with all these businesses we're going to talk about today, I see them all doubling their market cap in the next few years. Some of them probably tripling or quadrupling their market cap. So I think there's a lot of money to be made with these stocks. We'll also quickly look at what analysts have to say about this. We'll look at charts for these stocks. And guys, as always, if you're interested in any of the tools that I use in this video, links are in the description down below. And while you're down there, smash the like button, hit the subscribe button if you're brand new as well, and hit the bell notification so any new videos that come out, you're notified on. Okay, so that's enough of an intro, guys. Let's jump into the content.
All right, so the first stock I want to talk to you about is CRM Salesforce. This is probably one of my favorite stocks here in 2021 because it's showing us so much value right now, and the market is mispricing this. Like, I don't know. I'm gobbling up as many shares of Salesforce as I possibly can because I think this is one of the safest and no-brainer investments over the long term. And you can see here the stock was doing phenomenally well in recent years. Ever since the March 2020 lows, the stock has just boomed ever since. It's been a company I've always wanted to have some exposure to, but just never took the time to really understand their business completely, what makes them such a dominant force. And ever since I did that, this is a company that I just can't stop buying. Those in my VIP group know how often I buy this stock. I just love Salesforce, so it's definitely one of the stocks I think that'll easily double over the next few years. So look at the charts. Salesforce, we're sitting at a pretty major level of support, kind of in between this 50 and 100 moving average on the weekly. I think we probably hover around here, and the major catalyst really for this company is the Slack deal closing. If you're not familiar, they bought out Slack, paid quite a bit of money for this company, but I think with Slack incorporated into their business, it's going to propel their growth even further going forward. So with this stock, we're down already close to 30% off of its highs. Once everything's said and done, this stock I think can easily go from a $200 stock to a $400 stock in a few years. I don't think that's unrealistic. If we look at the market cap for this company, we're sitting at $194 billion today, which is dirt cheap for a business that's this dominant in my opinion. And right now Salesforce is pretty much a pure play enterprise type company, but there were some rumors that Slack is actually looking to have some sort of like Clubhouse competitor possibly coming out. And if that's the case and Salesforce acquires them successfully and everything goes well, Salesforce will have some consumer exposure, and that's just going to expose this company to becoming an even a larger company, maybe even a $1 trillion giant similar to Microsoft in the future. Now, a lot of people think, okay, Salesforce, how much more can this company really grow? It's so big. Well, you'll be surprised. This year, 21% growth expected. Next year, again, close to 20% growth expected, over $30 billion in revenue. And I think this is just going to be, the tip of the iceberg. I think they're going to blow numbers out of the water here, not only with their revenue, but also with their profitability. Because as you can see, they're going to right now hurt a little bit because acquisition, all that kind of stuff. But once things start recovering, this is going to be a very, very profitable machine. And that's when everyone's going to want to get into this stock. So I'm telling you guys, this is one that I'm buying heavy. Now, in terms of what analysts have to say real quick here on tip ranks, they see around a 30% upside over the next year, which I think is really sandbagging it. We look what individual analysts have to say. A lot of them are kind of on the higher end of 30 to 40%, somewhere around there. Some of them even have price targets over $300 per share, and this is a 12-month price target, guys. Keep that in mind. So over the next, say, 2 to 3 years, this could easily be, like we said, a $400 stock. The next one I want to show you and talk to about is Beyond Meat. Now, some of you have a love-hate relationship with the stock, but trust me, this one is one that I personally believe in long term. Not telling you to go out there and throw your life savings in this because it is a volatile, risky stock, but I have a good amount of capital in this company. Right now, we've come down to a very, very strong level of support, in my opinion. We're sitting down here around the mid 120 range, which is where I love buying the stock, but I've already built up such a big position. I may buy some option contracts in this one soon, we'll see, but it's really hard to pass up on this company. The stock right now is sitting at like 125, like I said, so a double up would be around 250. That's not that hard of a feat, guys. The stock got close to that when it IPO'd back in 2019. And I think once, things recover in the industry for their business and things start chugging along once again like they were before 2020, this thing can easily surpass $250 per share. I think it's going to go much, much higher than that, in my opinion. Now, in terms of size of this company, this is a just under $8 billion market cap right now. A double up to $16 billion market cap. Long term, I think this will be a $50+ billion market cap. So I'm betting big on this one. I think this one has staying power to really make a difference over the long term. They just have their partnerships in place. They're working with companies like McDonald's and Pepsi, which are dominant in the food sector. And I think that's going to drive massive growth eventually with this stock. Right now, investors are just hating on it, selling it, negative sentiment. But I think that food services business, that's the key catalyst for this company. And once that comes back, once, the economy fully opens back up and things are somewhat back to normal and people are comfortable spending money at restaurants again and dining in at restaurants and all that stuff, this stock will boom. So if anything, guys, in the 120s, this is such a good deal. I can't stress that enough. Analysts here, ready for this? Project the stock to grow 40% this year and accelerate to 46.5% next year, closing in on $1 billion in revenue next year. And like I said, this is just the tip of the iceberg. As this company keeps expanding globally, expanding their partnerships, working with massive brands, it's gonna make this a multi-billion-dollar revenue company, which in turn will eventually make it a much more profitable business. You can see here, year ago, not profitable. This year, not profitable. Next year, expect to be profitable. And this is all on the back, in my opinion at least, on food services recovering strong, which I think it will. Now, analysts here have a pretty mixed rating on this stock, around a 9-10% upside, $142 price target. Some of them are kind of bearish on this still. Some of them are fairly bullish. Here, Citigroup is probably one of the more bullish ones. Stephens here, around $190 price target, which is pretty close to already a double up today. And again, this is just short-term price targets. I think over the next few years, very easy for this stock to be $250 plus. I think this will be pushing $300, $400 in a few years. I've actually made a video in the past how this could be $1,000 plus stock, and that's not exaggerating or just being unrealistic. That's a realistic possibility, in my opinion, over this next decade or so. So Beyond Meat's our second pick. Let's move on. Our third pick is good old Peloton. I've made a bunch of videos on this recently. You guys know I've been buying this stock, and I think we're getting close to leveling off here with the stock. We're extremely oversold at current prices of close to $100 per share. And I don't think it's hard for people to see this as a double up once the sentiment comes back. This stock had massive buying back in 2020. And this is towards the tail end of 2020. So it wasn't even when things hit. This is because investors finally realized, okay, this stock means business. This stock can be a profit machine. And you can see on the sell-off here, it's been very little volume. So all those big investors, they're still holding, and that tells me they believe a lot more upside is still ahead. Technicals show us kind of like a double bottom here, support on the 50 moving average, which is good. And I think this one has a very, very strong chance of recovering back to its all-time highs, possibly even by the end of this year. There's just been a whole slew of negativity on this stock in recent months, from delays to the economy opening back up, and just a lot of unreasonable fear, in my opinion. And I think that has pushed down valuations to levels that I just cannot ignore anymore. I'll be honest, when the stock was kind of up here pushing new highs, I was just not having it. Peloton, I don't care, not investing in this. But as it sold off, it attracted more and more attention to me. And as I looked into the business, this is a very profitable business model that they have going, which I think will generate billions in the future. Now, in terms of their actual size, they're a $30 billion company today. Double Ups is a $60 billion company. Not that unrealistic, guys. Again, going from a $100 price right now to around $200 price, not all that far. We were pretty close to that just a few months ago. I think once things recover, we'll probably get back up there once again. So analysts here are pretty optimistic on Peloton. A lot of them see huge upside, almost a 60% upside right now. A lot of them have, $190, $180 price target here. You can see that's close to a double up from where we're at today, and this could happen in just about a year or so. So if you're holding the stock, say, for 3 to 5 years, you could see much larger gains in this company over that time period. Peloton, of course, is expected to just continue their growth. This is not going to slow down anytime soon. 124% expected this year, 35% expected next year. And I think this one is kind of sandbagging it. I think this will probably be close to the 50% mark. We'll have to wait and see. They're making efforts to kind of push equipment out as fast as possible. And I think that'll actually help this number go up quite a bit. The good thing about Peloton is they're actually profitable. Current year, they're expected to be around 0.32 EPS, and next year is 0.71. That's pretty much more than a double up. Very profitable business model, a very interesting business model, and definitely one you want to spend some time at least understanding better, if not possibly looking to invest in it. Not financial advice though. Okay, moving on. Number 4 is a fan favorite, my largest stock in my portfolio, good old Tesla. This one actually corrected down 40% at its lows a few weeks ago. We're not sitting too much above that right now, so it's still posing a pretty decent value. And, the stock has just had a phenomenal run in the last year. You can't blame investors for taking profits. You can't blame investors for, just selling off the stock right now because they made so much money on this. You got to cash in at some point, right? Well, my opinion is I think this one has a lot more room to grow. I think we're just getting started. And around a $600 price here, I think we can easily double up to around a $1,200 price in a few years. This may not happen in about a year. This may take 2 to 3 years to play out, maybe a bit longer than that. But I think it probably will happen sooner than most think. Tesla is a close to $600 billion market cap today. Let's just say $600 billion. So a double up would be around a $1.2 trillion market cap. Now ask yourself this question. With Tesla's revenue, with Tesla's projected growth, with their global dominance, do you think that this company can hit a $1 trillion market cap? I think so. I think with their consumer-facing segments, with their trucks and their cars and their SUVs and their semi-trucks, and then of course you have the energy part of the business starting to ramp up with solar panels and energy delivery and all of that stuff, and other parts of the business like robo-taxis, which I think is a lot longer of a game. It's not really something that's going to happen in the next year or two. Probably going to happen over the next 5 to 10 years, but that's another revenue segment for them. There's also insurance that's going to probably pull in a lot of money for them. There's a lot of different aspects of this business that has big potential, which is why it already warrants more than a $500 billion market cap today. And I think it has a lot more room to grow. Now, in terms of growth, this company is not going to slow down. 52% expected this year, close to a $50 billion revenue run rate. And then next year, around 30% growth with around $62 billion revenue run rate. So I think this actually is maybe sandbagging it. I think Tesla will probably come closer to, the mid to high 60s most likely. But we'll have to wait and see. You can see the high estimate here is around $76 billion. Low estimate's around 50. I think it'll probably come closer to this than this. Okay, so now we'll jump over to the analysts, but keep in mind, they're typically wrong when it comes to Tesla stock, okay? They think that the stock is pretty much fairly valued right now. But just a few days ago, we had some crazy bullish analyst come out, Piper Sandler, with a $1,200 price target on this stock. Almost a 100% upside in the next year or so. This is huge, guys. This is a pretty reputable firm, 5-star analyst on here, pretty good track record, and he sees a $1,200 price in about a year. And if you go down, you'll see some other price targets. They're all close to around $1,000 per share. Another one here over 1,000, another one here over 1,000. So there's a lot of analysts that are very bullish on this long term. I think this one will probably be one that surprises a lot of people because, they think the story is done with Tesla right now. The bubble, if you will, is burst, but I'm on the side that I think Tesla is probably going to recover and recover strong and be a $1 trillion company very soon. So let's move on to our next pick here, which is good old Facebook. Facebook's one of my favorite stocks, one of my largest positions, has been, ever since a few years ago when I really started going heavy on tech stocks. And guys, I think this stock is poised to explode. Now, if you're part of my VIP group, I've been calling out Facebook for a little while. I've been saying, okay, around the 250s, 260s, this is a buy. And I wasn't just, spewing this. I was actually buying heavy myself. I was loading up a lot on my Facebook position. It raised my cost basis, yes, but guys, this is a long-term winner. And you can see this one, despite the market seeing a little bit of rocky times with tech stocks, with growth stocks, which is, Facebook is both of those, it has been pushing clearly higher and almost making new all-time highs. I was actually telling my group members down here, I think this will probably hit $300 per share by the end of March. We got to like pennies on that. We almost hit 300. So we pretty much got there, guys. But I think the next year or two, oh man, this one is going to be a much higher stock. I think this one has room to grow easily to a few $100s in a few years or so. No doubt in my mind about that. I think the market has been mispricing this for far too long. And once people realize the amount of money this company makes, how safe their business model is, how dominant they are, more and more money is just going to keep getting plowed into this stock. Now, Facebook is a $800 billion company today. A double up would be around $1.65 trillion company, around there, 1.6 trillion, let's say. Is that unrealistic? I don't think so. Amazon's like around that price today. Apple's around $2 trillion. Microsoft, I believe, is around that as well. Facebook generates so much cash. They have no debt on their balance sheet. They're just so dominant in their space. They deserve to be in the $1 trillion club as well, and we're getting pretty close to that now. So I think this one's probably one of our safer investments, even safer than Salesforce in my opinion, and should get us about a double up in a few years or so at most. Now, in terms of what analysts have to say in terms of their growth, this one's expected to grow 25% this year, surpass $107 billion. And next year is around close to 20%, around $130 billion. So a lot more growth in Facebook. And keep in mind, with their business model, they just have to raise ad rates by a little bit, and that's just going to make this number explode, make the profitability explode, and just everything about them is just so good. And until there's a serious threat of a competitor coming in, this will be one of my largest holdings in my portfolio. Now let's kind of see what analysts have to say about this, okay? They have a strong buy on the stock, no brainer in my opinion. Close to $350 price target, it's a 20% upside. But a few of them see a little bit more of an upside here. They're, the mid 300s seems to be pretty reasonable for the stock over the next year or so. But again, like we said, can it really double up? I think pretty easily this one should double up within the next few years. So keep an eye on this. Don't sleep on Facebook. I know it's kind of a boring tech stock and all this kind of stuff, but the numbers speak for themselves. The fundamentals are just rock solid. Guys, our sixth stock on here is Splunk. And this one, I was debating including in this video because I've talked so much about it. But the charts, guys, the charts are just so hard to pass up on. In fact, I just made another big purchase in Splunk just yesterday, and I can't get enough of this company. I actually plan this to be around the 2 to 3% mark in my portfolio. It's already there, but guys, I want to get more Splunk on this massive dip. We can see here we're hitting a very critical level of support that's held quite a bit over time, and this tells me that things are consolidating. This tells me that the selling pressure is kind of slowing down a bit. Investors are finally seeing that, hey, this one's not going to go down much lower because they are still a good business. And I think very soon, mark my words, I think very soon we're going to see this one recover. Who knows? Maybe we make a run for all-time highs this year. It may take a bit longer than that, but I think for sure around the 130s, 140s, this one is a steal. Splunk today this is a joke, $22 billion market cap, guys. This stock, in my opinion, should be worth at least double of this market cap. It's a leader in its space. It's shifting to a SaaS model, which will be extremely profitable for them long term. They have a very strong brand, a very strong product that consumers love. So just everything about this company is just amazing. They're in a space that, big data analytics, which is just exploding and will keep exploding this decade or so. because with 5G and all, new devices sharing data and having data logs and stuff, there's a need for businesses like Splunk and their services. So can this double up to a $44 billion market cap, let's say? Yes, I think so. And I think that'll push the stock from 135 around 270. Yeah, I think that's pretty doable on this one. That's pretty doable on this one, and may happen fairly soon, in my opinion, once the sentiment around, cloud stocks, tech stocks, that kind of stuff turns around. Now, in terms of their growth, analysts see around 14% growth this year because, keep in mind, Splunk is shifting to a recurring model, and that typically means their upfront costs are much lower, and that means their revenue is going to be much lower upfront. But over time, things are going to pick up, revenue is going to start growing rapidly, and I think that's going to be the real story with this company, because as that picks up, as profitability starts getting into the picture, sentiment's going to start changing. Everyone's going to want a piece of Splunk. And I think this one is going to be one of my best winners long term, which is why I just keep buying this stock. And it seems like, analysts are fairly on board with this story as well. $200 price target, which is a 50% upside from today. And this is just in a shorter period of time. Here we can see around $265 price target on the more bullish analysts, which is pretty much a double up. And a lot of them, see at least a $200 price on the stock, when today we're sitting at 135, guys. Don't sleep on this one. Take some time to understand their business. It's a bit more complicated than others, but if you like stocks like Palantir, Snowflake, Datadog, Splunk is valued much cheaper than them, as a very good product in that space as well. And I think eventually, once the market starts pricing it like those other stocks, it'll be a big winner in one's portfolio. Again, not financial advice, just what I'm personally doing. I want to share this with you guys, and I hope you can make a lot of money on these stocks: Splunk, Beyond Meat, Peloton, Tesla, Facebook, and Salesforce, like I discussed today.
So guys, let me know what your top picks are here for the next, say, 3 to 5 years. What are some companies you think will just be dominant in the next few years with a double up on their market cap, possibly even more in that time frame? I love reading through your comments and seeing suggestions that you guys have, new ticker symbols I've probably never come across before. All of that means a lot to me, so take a second, comment down below. It's always appreciated. Anyways, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.